Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on RSI, or the Relative Strength Index, which is a very popular trading indicator, technical analysis indicator that traders use regardless of time frame, whether you're doing the daily, weekly, monthly, yearly, 5-minute, 1-minute charts. RSI is extremely important because it shows you areas of overbought and oversold. And what that basically means is when a stock is overbought, meaning when it's reaching peak resistance levels, people want to take their profit. So in higher overbought levels, people tend to take their profits and then stocks tend to pull back. In oversold areas, that's where, a stock is finding a bottom, it's getting sold, getting oversold. So that's where, buyers will start to step in and purchase the stock. Again, it's not a 100%, like if it hits a certain level, someone will buy exactly at that level, or they'll sell at a specific overbought level, but it's something you really want to be aware of, because at some point within the near future of that time frame, again, someone's either going to sell and take their profits, or their buyers are going to come in and start buying the stock again. So I'm going to show you some examples of overbought and oversold. I'll show you a few. I'll pull up some on the daily, and I'll pull up some on some shorter term time frames, just so you can get an idea of it. But if you want to learn more of like the exact definition and read more about it, if you go over to investopedia.com, it's a very helpful resource that we use, especially pretty much for anything you want to learn about in the stock market. You just come up here, go up to Investopedia, just type in RSI, Relative Strength Index, whatever you're looking for, MACD, and you'll be able to learn all about it. So you can read all of the technicals here, get the exact definition of it. But pretty much at this point, if you really read down here, you'll see that RSI provides a relative evaluation of the strength of a security's recent price performance, thus making it a momentum indicator. RSI values range from 0 to 100, and the default time frame for comparing up periods to down periods is 14, as in 14 trading days. Now right here, this is what most traders really pay attention to, or kind of explain it as, is the traditional interpretation and usage of the RSI is that RSI values of 70 or above indicate that a security is becoming overbought or overvalued, so people start to take their profits. So it might be a trend reversal or a corrective pullback in price. So people take their profits, and that's where you wait for a pullback to potentially get back in if the stock is continuing further up. On the other side of the RSI values, an RSI reading of 30 or below is commonly interpreted as indicating an oversold or overvalued condition that may signal a trend change or corrective price reversal to the upside. So that's where the buyers will start to potentially come back in and purchase the stock and ride it back up. So let's go over to some securities and take a look at them. This right here is the SPX, or the S&P. And this is a typical chart that I have up here. Or when I say typical, I'm a day trader or short-term trader. I do some, swing trading as well, but I'm more of a short-term trader. So I have my charts kind of with the EMAs, or the exponential moving averages. You'll see the blue line I have here is the 9 exponential moving average. The red is the 20, the black is the 50, and the purple is the 200. So moving average lines are extremely important. Number one, really, you look at candlesticks, then moving averages, and then you look at these other indicators. This right here is the RSI. You can't really see it because I have it in a dark blue, but if you kind of come up here, I'll kind of make it colored. I can't make, there it goes, RSI right there, you'll see it. I just like really vibrant and dark colors. Number one, I just like the look of them, and number two, I do a lot of videos, so it's just easier to show it and make it pop on a white screen. So, but this right here is RSI, or the Relative Strength Index. Down here, you'll see I have MACD. Let's see if I can get this to show. It's not, it's not popping up because I have the the dark blue, so the dark blue is kind of hovering over it. But again, when you look at RSI, you'll see over here, there's the 70 level, this line up here, and this line down here is 30. So anything above 70, when it gets above 70 or above, you'll start to, that's where it's called overbought. Anytime you'll see 30 or below, it's oversold. So anytime, again, a stock gets up over 70, that's when the sellers start to sell and start taking their profits. Again, when it gets down to these 30 levels or below, you'll see the buyers start to come in and start to buy the security up. And again, sometimes it could be, this is a daily. I'm showing you the daily charts right now. So, it could be a matter of a few days, a couple days, a week or 2 weeks. At some point, it will pull back if it gets overbought, and at some point it'll start to go up if it gets oversold. But that's where you need to do your proper technical analysis and charting to see when that's going to actually happen. There's not an exact science or a specific day or date when that will happen. But if you look over here to these levels right here, this right here is December, this is right around December 6, 2016 to December 14th. You're going to see RSI was up in the upper 70s here. So if you look above here, you'll start to see right up here, you'll start to see this really nice bull flag started to form here. And it started to get overbought, and you'll see it went right over to this area here. And then if you look here, this isn't necessarily, it just was kind of a small pullback, although it's bigger than you might think, because this is the S&P. But you'll start to see there starts to be some consolidation, and as it moves, you'll start to see RSI go down from 70, and it kind of starts moving down, and it gets all the way down right here to right down, where is this right here? Around the 50s. So you'll see it went up from upper 70s down to 50s. So you'll see it went up, nice bull flag, some consolidation, comes right smack back down. So it's not as much overbought anymore. It starts to pull back to more of the equilibrium level, the mid-range around the 50. So 50 is the equilibrium of a stock. It's right in the middle. So once it does that, look what it does. It hits right down, right around the 20 exponential moving average, or EMA, and then it pops back up. See, traders watch this. They watch candlesticks and moving averages. The first line of defense would be that 9 EMA, then the 20, then the 50, then I don't have the 100 on my chart, but 100, 200. There's not an exact science. Sometimes they'll drop really quickly or it'll go really slow. Oops, let me just try and get, oh, there we go. I'll get back there. But that's where you have to watch the stock and see when it actually pulls back. But you'll start to see overbought, kind of consolidates, comes back down here, and then it's starting to kind of trade sideways a little bit. And then you'll see, look over here, the S&P right here, right around December 10th area, you'll see massively bullish, goes all the way up here. And this has been trading for, well, let's see, December 13th or February 13th, all the way to, about 3 weeks here. This is after the Trump presidency, so the market's been going really, it's been rising really pretty high. At some point, it's got to pull back again. Again, the first line of defense will be this. Oh, market closed. Will be the first line of defense will be the 9 EMA, then the 20, the 50, and then going down towards the 200. See how far it'll drop. Again, it doesn't mean there's no way to tell how far it's going to drop and when, and that's why you got to watch candlesticks, and it all depends what type of trader you are, whether you're a day trader, swing trader, long-term trader. Candlesticks, EMAs, and these indicators are very important. So this just gives you an idea that right now the S&P is overbought. At some point, it's going to want to pull back. Again, it'll start to go to the 9 EMA, then maybe to the 20, and see where it goes from there. Once it hits down to the 20, if it's below here, stocks tend to want to gravitate back to that 20 EMA. Again, it's not an exact science, but that's where it naturally wants to gravitate down to, and that's where you want to see how far it goes. Will it bounce above the 20 and go back up to continue the trend, or will it fall back down? Who knows? That's where you just got to keep track and look. Now look over here. So this down here got, where was this? Right around the election, November 4th. You'll see that it was down to, what is the RSI here? Right in the upper 20s. So you'll see it was oversold here, right? And you'll see right here, November, whatever, 7th here, the buyers stepped back in and it went from oversold and then it started to go back up again. So this is where right at the base, people came in here, the buyers started coming back in, started riding it all the way up. You'll start to see it started to touch, 70, starting to get in the overbought area. What did it do? It right here started to consolidate down a little bit, so it pulled back. People took their profits. Buyers came back in. Look what it did. It made it overbought again. Started to sell off a little bit. Some consolidation came back down here. It didn't get oversold. It went more to the equilibrium. Again, that 50 is like the equilibrium of a stock, right in the middle. And then it starts to go from there. You'll start to see some of this consolidation here. So look over here, look above here, consolidation. Went up a little bit, but still, again, it's approaching overbought, but not really. I mean, it's around 65, kind of goes sideways again up in this area, and then look at this, goes up, overbought, and at some point it's going to want to pull back again. So sorry to keep repeating about this, but it's just really important when you're looking at this. I wanted to make this kind of really comprehensive to show you quite a few examples how stocks move, looking at the equilibrium of a stock, which is at 50 RSI, and then once it starts to get up to 70 or above, it gets overbought, and that's where people want to sell and take their profits. Once it starts to broach and head down here, you'll start to see, look right here, like the candlesticks start falling down, they fall down, starts to hit a base, buyers come back in, they start to buy it up. But again, you always want to watch the stocks, see how they move, see, again, there's not an exact science. Sometimes, a stock will pull back and then it'll go right back up. This is a big deal, especially for the S&P to be overbought for this long. This is a pretty prolonged period of time, but again, at some point it will pull back. Let me pull up, what else can I pull up here? Let me pull up gold, GC. So let's take a look at gold. I've been making some videos here, so let me remove the drawings here. So at this point, you'll start to see, not as prolonged of periods of time, but you'll see a nice period of time here. This is overbought up here. So you kind of just go up here to the top and you'll start to see it starts hitting a peak right up here, and you can see major resistance levels, some consolidation and resistance levels. And what did it do? It pulled back, and look at it, kind of drops back down. So when it got overbought, it did, you want to start to see the levels, previous areas of resistance, because again, resistance is all about previous areas of a stock where it can't go any further above, because people, the buyers, the sellers are going to, take their profits. You got to look again, different levels of how big they are. Sometimes they're small areas, and if it breaks through, then the stock might go back up and break through resistance and then come down and touch support again. Again, that's something that you just always want to watch. But at this point, this is starting to broach the areas of 1400, which is a pretty major resistance area for gold. So the sellers were starting to come in and starting to sell and take their profits. And then you'll start to see starts coming down here, starts going in these areas here, kind of equilibrium, some kind of this up and down choppy phase. And then you'll start to see, look over here, right here, and smack down right here, and look at where it went. Oversold area. What happened there? Buyers started to come back in a little bit, popped it up, and then what happened there? Sellers, major sell-off, and look at all this. This is massive. This got crushed. Gold got crushed for these few months. What was this here? It was November into December, because obviously the S&P was up. So, it's not an exact science, but when the market usually goes up, gold typically tends to trend downward. Sometimes they trend together, but with that extreme bullishness of the S&P, the gold started to go down because people had their confidence in the S&P. But you'll see how everything goes. It kind of goes down here, hits these bases here, and it trends below. You'll see here it trends below the EMA lines. So once everything's really, when it's in a trend, whether it's up or down, you'll see right here that again, gold has been heading down and really oversold, and you can see it's all below the 9 EMA, 9 moving average line, and then it starts to cross over. So the buyers start coming in, and then price is starting to go up, and you'll see the 9 cross over the 20. That's a bullish sign. and you'll start to see gold is continuously going up here. And look, it got overbought. What did it do? It had a little bit of a pullback, some consolidation, came down a little bit here, and then it started and continuously rode up. But look, if I scroll in here, you'll see that the price is obeying these moving average lines. You'll see this was a close below the 20, which should have been worrisome. But obviously someone came in, the buyers came back in and started buying it. You'll see this hammer here, it stopped and it kept the reversal, and now it's going up. So you'll start to see going up here, overbought over here, starts to pull back down, starts going towards equilibrium, back to overbought again up here, starts to pull back, and it wants to obey this 20 moving average line. So you watch it. If it starts to close below it and watching the candlesticks, then it could be a reversal going down. But that's how everything works. You'll start to see, let me go back to the SPX again just to show you. You'll see here when it's bullish, price is riding above those EMA lines. So the 9's over the 20, which is over the 50, which is over the 200. That's very bullish. You'll see price is riding it, going up. So it goes up, pulls back to the moving average line, goes up, pulls back, and now when it's again getting overbought area, it wants to pull back to the 20, bounces off. You got to watch whether it's going to fall down and go down to the 50 or below. Then it starts to go up. Again, it's not going to always pull back to the exact science of the 20 or the 50. You want to watch it. Once it starts to break below this 20, you just keep a really big eye on it. Because again, that 20 moving average line is a pretty big deal. And all the moving average lines are very important. It's just a matter of the trend and what's happening. But the moment price, if it's very bullish and it starts to cross over the 9 and the 20, that's the next line of defense, going down to the 50. So, and as you can see here, look at extremely bullish, and it's been riding that 20 EMA. Again, going back to gold, you'll see it when it was bearish, it's below that 9 EMA, it's falling down, but this RSI lets you know oversold areas, and you would think down here someone should come in and buy it, and there was little dips, so you'd see little curls of up and down, but this is where you can get trapped, so a lot of people will think, oh, I'll just buy it when it gets low right over here. So a lot of people would get trapped and they would buy one because it's oversold. Hey, this is a great time to buy. But no, it wasn't. Look, it didn't cross over those moving average lines. You want to wait for these moving average lines to kind of cross and get back together. And this is where the time would have been to kind of get back in, unless you wanted to hold. You can get really trapped. So let me pull up a couple other ones here. Let me pull up some of these today. This was just some generic stocks. I'm going to show you it on a 1 and a 5 minute chart just to show you what it looks like when day trading. That was on using a daily chart. You'll start to see when I zoom in here now, you'll see a 1 minute and a 5 minute chart, and here's the RSI here. So here's the lines again, 30 and 70, 30 and 70. So this is what day traders, keep an eye on as well. So not only do you look at it on the daily, you look at it on the shorter time periods as well, and it tells you all these areas. Above here, overbought. Above here is overbought. Down here is when it starts to get oversold. So you'll start to see, let's look at the 5 minute chart here. I'll zoom in. You'll start to see right here, let's go to during the market hours. Look at this. So look where it gets up in this area here. So you'll see right up here, this huge green candlestick. That's the big flagpole right here. So it's the start of a flag, but this is the pole. It's so far away from these moving average lines. Even if you didn't have RSI, when you see a huge green candlestick going up that's far away from the moving average lines, that's an overbought area when it's going up. That's the start of a flagpole, which means it's going to pull back at some point and create the flag, and it's either going to go back up and continue the flag, or it's going to fall back down. But you'll see here, over 70, big huge flagpole, starts to pull back. See, it pulls back down here. Then what does it do? Big green candlestick up, huge overbought, comes back down here. So a lot of people might think, oh, okay, that's the flag forming, but what did it do? It didn't go back up again. It was a kind of a fake out right here, and then it dropped. But again, you can see these areas here on the 5 minute where it gets overbought, and you can see MACD is another indicator here when the two lines are separated and the blue is over the red, where that's the color I have it, that When it's crossed over the red, this separation's really bullish. But the moment it starts to curl, and you start to see it rolling over, and then when price starts to fall below these moving average lines, and then they cross downwards again, it gets bearish. But see, that's on a 5-minute chart. Same thing on the 1-minute. Again, it's all your strategy, whatever you're doing. When you're doing day trading, a lot of the day traders, they're trading this 1-minute chart, and then they're going to follow, the 5-minute to go along with it to kind of see what's actually happening. So you can see this morning here, this is not really a great example, but in the pre-market was overbought, started to pull back, but you kind of just watch these together, and you can see this is so super choppy. But if you can kind of see down here, it starts to get oversold here down in this area here. But I mean, you could take, I wouldn't take the risk until you start to see the 9 cross over the 20 on both. You ideally want to see it on both. You can see over here, when the 9 crossed over the 20 here, this is a nice entry here. You could have, but you want to wait though. You want to wait for price to cross over the high of the day. This is a terrible, this was JNUG. This is not what I wanted to show you here. But anyways, just while we're looking at it, you can go back and see the overbought areas, oversold. This got chopped crazy today because Janet Yellen was speaking. So you'll see these crazy long candlestick wicks. There's super weird, crazy stuff going on. But you want to watch for these things. You want to watch for the 9 crossing over the 20. Not in this one. This is a bad example here. But again, just showing you the overbought areas. I want to show you a couple other stocks. That wasn't the one I wanted to show you. If you go over here, this is BCRX. You'll see lots of different areas here. This might be a good one to show you here on the 1-minute. Look at the different times. There was quite a few times today where you'll start to see it goes up to perfect. This is exactly what I wanted to show you. This is a perfect example one. Let me just zoom in a little bit more here. There we go. Look at this. So when it's broaching overbought here, you see big long flagpole, pulls back. See how it pulls back down? Big long flagpole here, right here, 3 green candlesticks, pulls back. And you start to see comes to the 9 EMA, goes up, down to the 9 EMA, touches the 20, bounces back up, and it did it a couple more times. Another flagpole up, comes back down, flagpole up, and then boom, big red one down, starts to fall back down, but then it did go back up again. But you see these areas up, down, up, down. So once it gets overbought, it's gonna, pull back at some point on all the time frames. It goes to show you again in the 1-minute. Let's look at the 5-minute today. It wasn't as drastic, but you can start to see these little peaks right up here. Let's look over on this one here. Right here, you'll start to see it starts pulling, it starts getting towards overbought over here, and then you can see it pulls back. Let me kind of zoom in here. Right up here. Yep, see that big green candlestick? And then a red candlestick back down. But it rides the moving average lines until eventually it breaks. It's either going to go up or down. But that's how the RSI works. It's an indicator that shows you, the idea is basically the sentiment of where the buyers and sellers are. Let me show you a couple other ones. RNVA. There we go. There's a lot of, look at these huge peaks here. So you can see, look at this one right here. Look at how hugely overbought it got right over here. So you start to see this massive green candlestick, huge flagpole. Then it pulls back. Now it didn't fall below 70. Again, this is a stock that was a huge runner today. It went back up again, another green flagpole, and then boom, sells all the way back down, all the way down to the 20. So it actually created a pretty much almost like an FU pattern, like almost a middle finger. So you can see a left shoulder, middle finger, right, right shoulder here, kind of falls back down, goes up, and then starts another almost another FU pattern here as well. But you'll start to see how it works again. These massively green flagpoles create the overbought levels, and that's what happens. And it starts to eventually it'll start to sell off a little bit. Let's see what this one did during the day. Kind of starts going, gets a little choppy and stuff here, and then it starts to head down a little bit further. But you can see in these 1-minute charts here, there was these dips where people would come in below 30 down here, buy it back up, then it would ride up, they'd take their profits, it would come back down over here, people would come back in and buy it up, come back down, goes to equilibrium again, and kind of touches down to a base a little bit down in these areas. So it's all the struggle between the buyers and the sellers, where again, once it gets overbought, people want to take their profits. Once it gets oversold, the buyers come back in. So let me give you a couple more examples just to, again, just really show you how the movement of all this works. Look at all these drastic levels of how things work. You'll start to see huge on the 1 minute, right all here. Look at all of these candlesticks riding the 9 EMA. Huge, huge overbought. And then what's it do? It starts to come back down right here. This touches the 50 EMA on the 1 minute chart. Buyers came back in, rode it back up again. Beautiful. It's all about charts and patterns, charts and patterns. You can see in this right here, this is, I don't know what happened with this stock today. Something happened here. Huge gap up. I don't know what was going on here, but you can see huge. Look at how massively overbought that is. And then consolidation, and then look at kind of just falls. Where'd it go? This is an ugly looking stock today. But it dropped all the way down here, and then the buyers again start to come back in. But you watch these levels. It's still important to watch candlesticks and EMAs first. The RSI is a lagging indicator like MACD, but at least gives you the kind of the idea or the sentiment of what's actually happening. But your first line of defense are these candlesticks and the EMAs, and then the RSI and the MACD, which are lagging indicators. Let me see, BLDR. This is more, you can start to see over here in the oversold areas, you start to see it falls all the way down. Boom, it gets really down to the base. Buyers start coming back in here. It gets a little bit choppy, kind of hits down again, and then the buyers start to come in and it goes up. But again, you can see it's not an exact science. So it doesn't mean just because you're buying at the base that it's just going to go up. You can see here, if you bought at the base down here, it went up, but then it kind of fell back down again. And actually the base wasn't as far as it fell before. It took a while for it to run back up again. But it's just going to show you, again, the levels of the buyers and the sellers, and just give you an idea of, you know, what's actually happening in the movement and in the stock. Let me pull up a couple more major ones just to give you an idea of, let's say, let's pull up Apple. You'll start to see, you know, right over here. Look at over in Apple. Hugely overbought right here. This has had a nice run for the past month. And look, price is just all above that 9 EMA. It's just running beautifully. Super overbought. But over here, down in these areas here, that was a sell-off. Got oversold down in this area. Buyers started to come in, bought it back up. Over here, overbought. And then it starts to fall back down. Back here, look at how oversold it got. Down here, you'll see down in these areas here, buyers come back in, ride it back up. So again, oversold areas, so where the buyers come in. Overbought areas up here is where the sellers tend to sell. You can't tell, it's not an exact science. That's why you have to look at all these other indicators. The EMA lines are very important. Candlesticks, I'd say, arguably are number one. These EMAs, I'd say, are number two. And then you look at these lagging indicators after that, just to give you an idea of what's happening. Let me do two more. We'll do Netflix, NFLX. Move the drawings here. Look at this, super overbought. Huge gap up, stock's going up, starts to consolidate, comes back down, goes to equilibrium areas over here. And you can see in these areas up here, overbought. And eventually they start to pull back and fall below the moving average lines, just like you see down here. Down here it's a base right here, oversold, oversold, heading towards oversold. Down here again, it's not an exact science. But once it starts to head to these areas, the buyers start to come in these base areas. And that's it. So let me, that's how, again, RSI works.